so good evening, everybody. Hope you guys are doing well. Shake my hand. As usual, if I'm moving too much and the mic is shaking and the sound is not good, let me know. Otherwise, it will just ruin your own video. Your own video will be trash. So please do kind of like let me know, please, if that's what's going on. But otherwise, hope you guys are good. We are diving straight into module 2. Last night, I gave you guys a synopsis, an introduction, to the kind of things that I want to discuss with you in module 2 and why those kind of things are, absolutely important. All right. And so that's really what I would like us to focus on. Please, my audio is not clear. Let me know. Right. So real quick, I don't know if you guys saw in the public Telegram group, but one of our newer students wanted me to look at copper. And it's a perfect time to do that because if you guys remember, when we're doing module 1, I struggled to find mute everyone. I struggled to find the ticker for copper. All right, so we ended up analyzing a copper futures that was a contract that was going to expire very soon. So if you ever struggle to find assets like I did when I was trying to find copper and I just couldn't remember how to find copper, my favorite broker to use is Arbitrade because it's got a lot of things. Arbitrade, IG markets, best friends, because they've got a lot of assets and you can trade all those assets at the same time. Wongi, before I forget, I literally just opened a new IG markets account for my partner. I'm gonna do some stuff there under her name. So
yes, I got an email, Leroy. I got an email.
You sorted.
I was on the waiting list. Yeah.
All right, cool. Okay, cool, fantastic. So I never forget. I just take forever to come back to things. All right, cool. So I'm glad you're sorted then. Right. So IG markets, Arbitrade. I love those two big brokers. IG markets, guys, for stocks. Massive honesty, yada yada, leverage it, blah blah blah. Arbitrade, because of our trading style, how they print candlesticks, but we've been through this in week 4 of module 1, right? So what I did was I came to copper on Arbitrade to see the price it's trading on, right? And on Arbitrade, it's trading at 4.72, which is then how I found the right one. I was just looking for anything at like 4.62, 4.72, whatever on TradeView, right? And then I quickly added that to my watch list in future so I don't lose it. So there it is, moving at about 4.72. So I found it. But so if you guys don't mind, can we just quickly help out? It goes by a couple of names, so I'm still I'm still trying to figure it out. But Mbasa or Lincoln. So let's quickly redo copper. All right, this is a buy profile asset. This has been a while since I analyzed the actual copper chart, which sucks, because I just inherently missed a nice buy opportunity here, but it's fine. This is copper, right? So this is the governing time frame. Let's just remove everything so that nothing is tainted, right? So there we go. Right, and we can see, markets kind of like started somewhere down here. All right, so we've got that. I mean, maybe let's use a proper horizontal line so that we don't have a slanted situation, but essentially we just want to make sure we find our major turning point, as we've done in module 1, and this was our major turning point the last time I looked at copper. But you can tell that price has now gone a little bit higher, broke out and then come back to the downside, and it doesn't look like it wants to sell. Right? We'll talk about this more in module 2. What does this mean about buy profile assets? You will notice that Mugs or Ronald in the private Telegram group, maybe 2 weeks ago, I remember the conversation that you guys had in the group there, where you guys were debating about what happens when you have a bearish engulfing and a bullish engulfing. What happens? Like who wins? It was quite an interesting conversation because there's also a bullish engulfment here, right? So you've got two demands. But long story short, I don't think price is going to sell. If it does sell, it won't be a massive sale. I don't think it's going to be a big sale, so to speak, right? So I just want to quickly remove all these other ugly markings that I've put in here. as quickly as possible. So for now, I'm going to identify that as my turning point because price did turn, right? Price did turn. I will come back and draw some zones and levels and talk about, pros and cons and etc. etc. Right. So major turning point right at the bottom, we can see that price has not yet returned to, these lows, right? Copper is quite a very precious metal. We need copper. All right. So there was a time to invest crazily in copper, and it was somewhere here. All right. So and guys, you guys are now in week 5 or week 6 with me. Are you guys picking up that there's specific assets in the world that just all moved at the same time? When COVID recovery started in March, this candlestick and this rally is in every single crypto market. Why am I saying this? A crash is coming. A financial markets crash is coming. I may not know how, may not know when, but it's coming. It's coming. It's like Jesus. Jesus is coming back. If you're a Christian, blah, blah, blah. It's coming. We don't know when, but it's coming. This is it, right? So notebooks, journals, you start to write down the stuff. It's something I want to develop rather, but I haven't gone public with it at all. You guys are going to be one of the first when you see my module 3, which is something I'm calling scenario analysis, right? So I'm using my entire research background and now I'm just applying it onto the markets. There's a serious reaction of risk-sensitive assets and minerals to financial markets. What does this mean? If there's a crash in the markets, what's going to die? Fiat, currencies, because economies are all crashing. So right now, I don't want to make, what you call this, clickbait videos on YouTube. So I always pull back on content. Like I could do 3 crisis videos, but then people get bored of hearing the same thing. But Evergrande crisis is actually creating a lot of problems in China. It's too early for me to go contagion, right? Like I did the first time. That's why I'm pulling back now and just studying the data before I make another video. But when currencies crash, economies crash. When economies crash, you don't stop being a billionaire. That's what I want you to understand. Rich people don't stop being rich. Financial institutions don't stop being financial. The first stocks I put out, one of them was JP Morgan in the Wealthy to 3 Years program. So those of you got the October note. They literally did $3.4 billion more than usual due to COVID because they literally were piling money into this. Copper, crypto a little bit, and all those risky assets that all recovered in the month of March. So you want to start keeping track of this stuff. And there's no shortcut, there's no secret formula, there's no website for it. You just have to do a whole lot of analysis, but stay woke, right? So you want to create a template for yourself. We'll talk about that stuff in good time, right? So anyways, this was a good time to buy copper. I mean, it was. I remember this like it was yesterday. Price was just below 2,000. We went crazy. I know a lot of people came out here in the senior traders room. We were literally like $1,000 was added. I fell off somewhere here at some point, and then I tried to get in, and I think I was stopped out. So, and since then, I haven't looked at copper again. But before I started class, as I was just preparing this chart, after I said just give me 5 minutes, I noticed that previously in my previous analysis, I was actually expecting a sell here. So I'm glad I forgot about copper, because had I not forgotten about copper, I would have had a sell order there, and I definitely would have been stopped out, right? Because copper, we knew it was bullish, but we thought it would respect a governor, all right? And the quality of the governor is interesting. It's interesting because I literally had on my notes sell, literally here. But when I look back now, I'm like, why did I think this would hold? Look at this, no clean imbalance. You can't say this big red candle is an engulfment, because it's engulfing nothing. There isn't. I'll teach you about proper engulfments, right? This one, maybe, try. But generally speaking, right, this is quite substantially quite a weak lift off. Like in terms of our module 1 simple rules, markets got their bounce back and then ferried all the way down, and then markets refused. So there was a fresh touch, in honor of something. Copper did drop just a little bit for the month. just a little bit for the month. And then came that scenario that we're talking about last night. Remember last night, we're talking about, I don't remember the pair, but it was simply a situation of what do you do? What do you do when a demand is created just under a supply, right? How would you know how to trade it? And like I said yesterday, you have to think about risk to reward. Risk to reward would have been your governing principle here. I don't know why. Okay, it won't let me do a replay. It doesn't want to do a replay on copper. How unfortunate. But I really wanted you to see that before all these candles came about, there was already the creation of a strong demand here. Right. So this is like an obvious type of bias. If you're a swing trader and you took profits there, you'd hate your life because you now know that markets are going to go up only if you're patient. So you have to take profits and then wait for the price to come back in here. And this is you again, right? Buying into the momentum. But long story short, copper to me looks like a buy profile asset. Has been a buy profile asset. The strong rally is so parabolic. What does parabolic mean? It's too straight. There isn't that situation that we were talking about last night, the situation of accumulation and distribution, right? It's also, I personally would want to see this fall. I really would love price to fall. I'd love price to fall and come to me and I buy again at 3,000, hopefully. But doesn't look like it right now because of this miss here. Here, we out. Now we wait for banks to win. There are hedge funds selling. There are banks trying to buy. We wait for big institutions to decide who's right, and then we figure that stuff out, right? But let's do a full MTI analysis, then we can move on to today's class, right? And then I'll actually build from here. Okay, so buy profile asset, we don't really need this zone because eventually it got broken, right? Markets ended up breaking through all of this stuff, so we're going to remove it. We want our demands green because I'll just get confused. Right, so we've got a situation that looks something like that. It looks like a very toxic relationship between buyers and sellers, right? So this is copper. You have to ask yourself the next question: immediate areas of value on the governing time frame. This is it. So everything's on this phase, this impulse move. Impulse move means, you know, the first wave when markets just shoot up, right? So this was potentially a very choppy impulse move, right? Choppy because it kind of like, you know. Then so that would be impulse, accumulation, impulse, right? You can see zigzag, right? Which we teach about. Zigzag is like our basic module one. Here, difficult. What, right? It's like yeah, sure, you could draw impulses on smaller time frames, but you want to see some clean distribution. You see when price rushes like this, whop down, and then you want it to hold. It will hold. But I always tell you guys, be careful how these things come back to you. So when markets don't distribute clearly, then and it's like a buy profile asset and there's little to no distribution. This is normal. This is very normal for price. This is, in fact, the fact that price went this low is impressive because markets are on their way up, right? So this was the first time there was a little break here. This complicated 365 candles, simply a reaction to a supply, the supply here. But otherwise, in general, this thing has been bulldozed in supplies from day one. It's literally been, this is during that, once again, track your assets. This is what year is this? 2008, copper takes a hit like every other asset in the world. The difference is Euro USD is still in that downtrend of 2008. Look at copper a year later, right? We figured it out. December of 2008, boom, explodes up. Once again, rich people don't stop being rich during a financial crash. They take their money out of assets that are crashing and dump it into assets that are built for crisis. The need for copper doesn't stop. Platinum does not stop. Crypto as a hedge will never stop. Doesn't matter what media says, right? So these things seem to shine. They seem to shine. As soon as the world started to get its stuff together, if you go through those charts that we've done previously, when the crisis is done, copper then slows down. It's like, okay, fine, you don't need us anymore. Why? Because rich people are going to take out some money now and go back to your Nasdaqs and your assets that quickly build up money. But when those things can't be trusted, when everything is going weird, price will choose these type of assets. So this is something that you don't ever want to forget. and you want to keep close to your piggy bank. As a trader, it doesn't matter. As a trader, if it's time to sell, you sell. If it's time to buy, you buy. I'm talking if you're trading and also investing, you gotta start to, as soon as you can in your life, switch to becoming a hybrid of both. We can trade forever, but we require a lot of trading psychology, a lot of time, blah, blah, blah. But investing, the moment you learn how to read these charts and you can make long-term smart investment calls, and you do that for 3 to 5 years straight, you will start to pay yourself to trade. You will pay yourself to go and trade because your investments, your passive income starts to pay you up. It takes a little bit of time to build. That's why I keep encouraging people to build, to start building their portfolio, right? But if you do it correctly, that dollar cost average in video, if you're consistent every month, you can buy yourself out of working for a living and you can start to really do whatever you want, right? Anyways, this video is getting too long, or at least this part around copper is getting way too long. Right, so we're going to buy profile assets, strong move, taking out a supply, etc., etc. This is the next area of value that I'm looking into. There's not much going on here. I mean, if markets come back there, there's like complete exhaustion, in my opinion, and there isn't a supply. So there isn't a supply. Supply was taken out. You can see for yourself. This is much more clearly. And right now it's too early to call for a demand because we need an imbalance. So anything can happen. So this could happen. Just to quickly give a long-term perspective on the governor, this could happen where we get our imbalance according to our rules. Then markets can then come back here and then specifically use this as a place to kind of like buy. If that happens, that's quite sad. That's very sad for me because I would prefer a scenario where markets just chill. Yeah, just chill, forget it, and then come back down here. All right. So we don't see a lot of strong volume, but I'm pretty sure it'll still hold. I'm pretty sure it'll still hold. Right. I prefer a beautiful discount on copper. I haven't taught you this yet, but we are in module 2 now, the use of the Fibonacci. Just want to see something. Yeah. So anytime the price starts to turn to the downside, so if the month of October is a red candle, right, and November, then this is definitely a beautiful place to wait for a long-term swing trade on copper, number one. Number two, definitely a good place to put a whole lot of money as an investment in copper, all right, because remember, this is what your investment would get. Let's forget about trade for a second. If you're to invest when price is here, just for price to go back to where it was before it fell, right, that's an extra 60% on whatever you've invested. It's just one way to think about it, right? But as a trader, you can trade this thing going down, you can trade it going up, etc., etc., etc. Right, so this is what I see right now. But the specific thing that he wants us to do is to do an MTA. So let's quickly brush up on an MTA, right? So I'm going to go to the weekly time frame. I'm going to rush a little bit through this. It's quite ugly, right? It's quite ugly, man. It's quite ugly. Right, let's do this. What does that look like? Actually, let's draw the lows right there. This is really because of this candle. You could do this, but then you just run the risk of being stopped out, right? Look at it. Like the next, the next time price enters this area, it's gonna really just chow you, right? And you wanna kind of like guesstimate how far the chow would go. Granted, I would never take the buy here. As far as I can tell, the area of value is exhausted. Buys could work, but I'd never take a buy, right? Still part of module 2 for you to learn how to correctly use trend lines and what they are telling you, right? So if markets have done a structure like this, even if a retest was to happen, I still wouldn't, I'll be caught. I don't think I would take a buy there. If I take a buy, it's like a short-term buy. It's like for 3 days or 2 days. I've moved to the daily time frame for clarity. So remember, if we're doing this, we would have WD1, right? Weekly demand 1 somewhere in here. And we would not forget the fact that there used to be a governing supply, but then that governing supply has been broken. But as they were breaking the governing supply, MTA, right? Remember, the whole point of MTA is to keep outlining our most immediate areas of value, So as they were breaking that governing supply, they made another one. It's not a governing supply, it's not a major turning point, but there is definitely a weekly supply that we should just take note of. Right, so I would do this. Let's see. Nope. 1, 2, then it comes back, and then so weak supply, weak by design, because once again, very strong buy profile asset. Let's check out how much order flow is left here. How do we do that? We simply want to see how if price is penetrated halfway through our area of value. So I use my measuring tool just to get a correct read of 50%, and I'm going to throw in a horizontal ray in the middle. Right, so you see price is already entered. So price is really using as many sell orders as possible to drop if it's dropping. And there's still resistance. There's like a hammer, right? Price action gurus will tell you there's a hammer, you know, some rejection to the downside. There's probably a daily demand somewhere down here, right? When you see something like this, there's always a demand somewhere holding price down. So this is a daily time frame already on H4 maybe. Yeah, there you go. There's a demand there, right? So that's what caused that hammer there on the daily time frame, right? So there's always some type of buyers. You can see price action traders will be talking about support and resistance here, right? You can see what you want to see on this chart there: resistance, support, breakout, retest, right? So yeah, still too high for me to buy if I was to, even if it was a short-term swing. So you've got a daily supply at play, right? But the daily supply at play is, to me now, officially weak. All right, it's not the strongest supply I would take. Markets could break it, but then until markets break it, it's very hard for you to shoot for the moon. So what you want to do now is on the daily time frame on your entry, start off with this swing low. I'm going to have to draw a couple of them. That's one. Beautiful. Once again, guys, I'm just doing this just holistically for those for the person who asks, but I will teach you the stuff properly, the fibs and all that kind of stuff. Right, but you can see here on our golden ratio, we've got everything that we want, and this could work. This is a bullish asset. Just remove the governing supply on the weekly time frame. We are already halfway through this area of value. We're actually very deep inside the supply. I don't like charging. So if I was a soldier and it was time for war, I'm pretty sure one of those soldiers wants to stand at the back. I wouldn't be the first one in the front of line, and that's how I trade, right? Minus the swords and my knife collection and my black belt. If it was time for me to die in war, I would probably go stand at the back. And what I mean by that is, I rarely take trades where the supply is still active. The supply has not yet been broken, and it's me and my money going to break the supply. I rarely take trades like that. Oh, what if the supply is strong? What if they put a bandage on the supply? So we're saying the supply is weak, and it is weak. But what if tomorrow or next week, Thursday, you get a situation like this where they give you a bearish engulfment, and then which is a bandage, right? It's like, oh no, the area of value has become weak, glass effect. But let's add some sell orders because we want to wait for something. Let's wait for another crisis. Maybe the housing market is going to crash next week. I don't know. I'm not on the New York Stock Exchange floor. I don't know everything about the markets, right? But what if the people, remember, this is copper futures market, right? There are people who actually own copper companies. If you ever see anything futures, or in the COT reports, there'll be non-commercial, which are our banks and stuff. Those are the kind of people we want. But then there are people who are commercially inclined, commercially involved. They actually own the copper. They will be trying to manipulate. Do you guys understand? Oh my goodness gracious. Let's talk about this real quick. FX, what's it called? My FX book. Let me show you something real quick. You guys have really pushed the boundaries with these classes, by the way. You're the one group that you've managed to make sure I don't stick to the stuff I'm supposed to just teach about everything. Right, let me show you something as quickly as possible. Right, COT report. You see, markets, institutions, if they don't want to release the COT on time, they won't. I thought Tuesday I was going to be up all night working on this thing. It didn't come. Hasn't arrived yet. Today is the 20th. They don't want, they don't want. What you gonna do? Right? You're gonna trade blindly. You have to rely on everything. Prices, everything. Right. So let's just open an old COT report, and I'll show you something right now. You see these guys? This is us. When I say us, I'm talking about banks. These are the banks. We want to trade like the banks, right? I'll teach you how to use this properly, don't worry. But I'm saying non-commercial. But it also means these guys are not invested in the asset. They don't care if the price of copper goes down because their asset will lose value. These are speculators. They want to push price up or down for profit, right? You guys, for profit. They want to make money, want to eat it going up, eat it going down. Most of the time, commercial positions have an intrinsic value on the asset. So I own a copper company and I need to remember supply or demand. If my miners can't get a lot of copper, or if there's something wrong, if the whole area, my main country from South Africa, I don't think South Africa is big on copper, it's more big on platinum, but just for this example, South Africa is my copper place where I get my copper, and then the president of South Africa shuts down the country because of COVID or because he's a psychopath, like in Zimbabwe, whatever. And people can't go to work to mine my copper. I am going to have a physical asset called copper, and I'm going to have to weigh the actual conditions of supply and demand of that physical asset. That is to say, all of a sudden, there's going to be restriction of supply because now there's level 5 in South Africa and people can't mine the copper. And so what's going to happen to the demand? It's going to skyrocket. If you Google any financial news right now and you just type the supply chains problem, right, you're going to see there's going to be a lot of issues. There's issues around supply chain chaos already hitting global growth. It's about to get worse. General say one supply chain problem, blah, 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 blah. Supply, you see, ships, containers. So if the supply of a product is affected, there's panic and chaos in the market because people can't get the goods. But in the background, if I have my own little stash, and I not only am I a copper asset holder, like I own copper farms or copper mines, so I can sell the asset, whatever, but I've got a small office, guys. Those of you who want to trade for a living professionally, don't just think about banks. I launched my entire career outside the banking sector, right? There are so many small industries that people don't think about that need FX traders. Insurance companies, the big ones, have an office somewhere in there where they've created a trading floor for traders. Sasol, I am literally hedging on Sasol, right? I actually thoroughly hate it now. Hedging against Sasol, but inside Sasol is a floor, a trader's floor of Sasol. Sasol is an oil company in South Africa where they're literally buying or selling oil against their own local prices, right? So if I am in that position where I own the copper asset, but also as a commercial hedger, or I have a little floor trader, but someone like Leroy inside my copper.com corporate company, they are also going to be micromanaging this. They're going to be hedging, trying to manipulate or control the price. Yes, there's a problem, shortage in supply of copper. So because of that, demand goes up. Yes, keep the prices up. So watch this. As institutions start to increase their shorts, copper commercials will start to increase their longs. I mean, this is not copper, but it's just the relationship of it, right? Long story short, just so you understand that. So on the daily time frame, like I said, we've got a very weak supply. If we're on the end of module module 2, would have known that the structure was broken and a new one was created, which was awkward because then it got broken again, right? Which again with the Fibonacci would tell us why. So we'll draw a fib from top down and right across. And there you see this golden area that I keep coming back to. Price hit it, dropped, price hit it, dropped. Right, and eventually markets broke through, glass effect, right? But if that was too fast for you, don't worry, it's coming. I just need to move on from copper into tonight's class, right? So I was saying to you guys, I don't like being the first one in the front line of the war. I don't want to drive. I don't want to use my money and bet and hope that markets are going to break the supply with me in it, right? So if I take those trades, generally speaking, I would really love you to go. I would really love you to keep going about DOT data. It's coming, my brother. It's coming. I promise, David. I just need to finish. The only thing I'm busy with is, apart from just being lazy these days, I don't know what's going on. Maybe I'm burnt out. Is that big document of all the trades we're going to take. But I'm done for the year in terms of corporate stuff, right? So as soon as that's out tomorrow, even tonight, I just need to proofread a lot of stuff and add 5 more assets. Then I can start to plan my content for the channel. I promise to do a lot of COT stuff with you guys, right? But I don't want to be here until this happens. So a perfect scenario for me with full MTA is this is green and this breaks supply. So the day they break supply, which is going to be, it's now on my watch list. It's now on my watch list, right? It's going to be in the next 2 to 3 days, maybe on Friday, maybe next week, Monday, if this holds. If they can take this out, then here, I'm here. I'm 100% here. But if they don't take it out, if they don't take out the supply, I'm not saying it's a bad trade. No. I am saying Leroy, generally speaking, no longer likes this thing of leading the charge. Let other people's accounts go die. Why should I risk my money? Break the supply without my money, right? But if you were to take the trade today, if markets were to come down today, all I would need is a good enough risk to reward ratio. All right, so I'm trying to get the words to go away. Let's hide. It hid everything. Right, so somewhere here, right? This high. Yeah. And what if price stops there? See, for now, it's not a good trade for me purely based on risk reward ratio. I always want this number as 3.0 going up, 3.5 or 5.00. I need to spend $1 to make $3. So for now, this is why I don't want to take this trade, but this is a good place to buy. What will change is if markets break the supply. Can you see what happens when markets break the supply? It means there's nothing stopping me. And even up to here, if I just get out here, which I wouldn't, I'll just swing trade this until I see a serious turning point on the daily time frame in the near future. But this will be a good place to get out. If markets were to break this, this would be the demand I would take. All right, so we can leave this marked up like this. I would prefer this to happen, just so we're clear, because I know I spoke a lot about a lot of stuff. There we go. I would want to see this. There. This is my take on copper. Shake my hand. I hope you watched this small part. Then for the rest of us, guys, let's get back to class. But this is copper. Cool trade, cool deal. In fact, I'm going to add this to the trading plan. Copper, I'm going to add it to the trading plan. You see, this helps. Yay. So it wasn't a waste of time for those of you who are going to take the trades. Copper has got a good potential buy. Thank you, Mr. Mbasa. Right, okay, guys, so let's rock. So tonight we are gonna fly. Some people are on the waiting room. Are they? Edwin, thank you so much. Thank you so much. Thank you. There's something blocking the thing that tells me. Right, tonight we're gonna just jump straight into it because I've already done somewhat of an introduction of what I want to do with you for the next coming I guess 2 weeks, give or take, so we can finish our course. Just a kind reminder of what I said yesterday in 30 seconds. All